You're watching the YouTube version of the We Are Innovation podcast. Join us as we explore how innovation, new technologies, and human creativity improve our lives. The future is calling.
Hi, I'm Federico Fernández. Welcome to a new episode of the We Are Innovation podcast. Today, we will be talking about venture capital, the rise of Qatar, and the recent launch of the Golden Gate Ventures MENA fund. And for that, I am accompanied by Michael Lints. Michael is a partner at Golden Gate Ventures. He is a battle-scarred entrepreneur, investor, and mentor with 2 decades of experience across 2 continents on helping innovative businesses obtain the resources, insights, and expertise they need in order to be successful. Online, you can find Michael at Golden Gate's venture website. I will leave the link on the description of the episode. Michael, welcome to the We Are Innovation podcast.
Thank you. Thanks for having me.
No, it's a pleasure. Thank you very much for your time. And I want to ask you, asking you about what inspired you to launch a MENA-focused fund based on Qatar, and what are, let's say, the opportunities that you identify in the region?
Yes, so we've recently launched our first MENA fund, which is now headquartered in Qatar. What inspired us was kind of a few things. We've been coming to the region, to the GCC, the Middle East, for the past 9 years, and have built up a network of not only investors, but also a lot of entrepreneurs. I think over the past years, the Middle East as a startup ecosystem has really gotten a lot of attention because of a lot of governments being able to invest in ecosystems and communities, a lot of attraction of foreign VCs, investors coming to the region. Examples are, of course, Abu Dhabi, Saudi, and recently Qatar as well. So in our research over the past 2.5 years, we saw a lot of, I say first entrepreneurial spirit, like young entrepreneurs trying to build their company away from traditional businesses. Of course, we saw a lot of support from government, sovereign wealth funds, but also family offices and big institutional investors looking to back and support the startup ecosystem. That in combination with us having a number of existing relationships in the region, either limited partners, other peer VC funds, and of course, a lot of founders, it kind of inspired us to look at the opportunity set and eventually decide to open up our first MENA fund here. I think Qatar is fairly uniquely positioned because of its amazing infrastructure. Of course, a lot of things happened during the World Cup in terms of new buildings, new infrastructure, the airport, but also a very active government and a very active regulator trying to attract more VC funds and entrepreneurs coming to the state. So we decided to pick Qatar as our headquarters. Very similarly in terms of rules and regulation. When I look at Singapore, for example, from a venture capital ecosystem, very clear, very transparent, and a very supportive government. So we decided, we'll make our headquarters here in Qatar and expand in terms of investing across the region.
And the fund is, if I understand correctly, it's 100 million USD. What can you tell us about, let's say, the strategy for allocation that you have, and which sectors are making you the most excited?
Yeah, definitely. As you mentioned, it's a $100 million fund focused on the MENA region. So we'll look at the Middle East, but we'll also look at parts of Northern Africa. I think it's a very, very unique opportunity set, but it does remind me a lot of Southeast Asia as well. Different countries, different infrastructure, countries that are developing at different speeds as well. So I would say where we are going to spend a lot of our time in terms of the strategy is investing first and foremost in early stage companies across different sectors, and I'll talk a bit more about the specific sectors later. What we're also doing as a fund is about 30% of our allocation is going to go to global opportunities with a nexus to the MENA region. So you can imagine that there are amazing companies and entrepreneurs in the United States or in Europe or in parts of Asia that are looking to expand to the MENA region and use it as their hub or use it as a market to expand to. So 30% of our capital will go to those types of investment, and about 70% will be invested across the MENA region. The majority of the capital will go into the GCC, but as I mentioned, we're also looking at parts of Northern Africa. We'll look at Morocco, we'll look at Turkey, we'll look at Egypt, of course. Jordan is also kind of part of that ecosystem. So 70% of that is really early stage capital to help and foster these early stage entrepreneurs. From a sector perspective, we want to take an agnostic approach. So we're not going to be pin ourselves down to one or two sectors, but we'll look at trends that are happening in the region. So one of the first trends that we're looking to invest in is B2B SaaS, business to enterprise SaaS, healthcare, medtech, logistics and supply chain, and wellness. So those will be sort of the first sectors we'll be looking at, but we'll also have a big interest in energy transition, climate, food security and cybersecurity as well.
Michael, sorry for the general question, but I would really like to know your how do you see this issue? You know, your fund is focused on the MENA region, and what are, let's say, the differences? Because I think on the one hand you have the Gulf Cooperation Council countries, you know, the GCC, that they seem to be, I mean, in a way, if you allow me to say, in a very good position in many ways. And then you have countries that, I don't know, Morocco, maybe, that, you know, you don't have that much, let's say, resources, particularly maybe a government so involved. So how do you see the region, you know, from this perspective, the things that are similar, the things that are completely different? What's your view?
Yeah, so it's a very good question, and I think it's often underestimated when people look at the region, because everyone kind of assumes that it's sort of all in the same, but it's definitely very different. And I would say even within the GCC, you'll notice a few differences. So just to give one example, if I look at you know, Abu Dhabi, you know, a very sophisticated ecosystem for the financial industry, a lot of hedge funds, a lot of private equity funds, a lot of VC funds have set up under the ADGM. So it's been a platform that has really attracted foreign funds. And because those foreign funds are there, you naturally attract a lot of good entrepreneurs that come to Abu Dhabi as well. Dubai, of course, is kind of really well known as a country where a lot of expats have migrated to in different shapes or forms. You know, during COVID, I think Dubai was one of the few countries that was still open. So a lot of folks from you know, Europe, from Asia, from the US decided to spend a few years in Dubai, and some of them actually stayed. So you have a very international ecosystem there. You know, Bahrain was known as a fintech hub years ago, so they really spent a lot of efforts and time on sort of building an infrastructure with Fintech Bay in Bahrain, and the Economic Development Board doing a lot of work there. There's a lot of attention for Saudi, you know, for a number of reasons. You know, the mega projects or the giga projects that are happening. A lot of work that has been done around the giga project from a fintech standpoint, electronic vehicles. So that also kind of works on its own speed. And then you have like a big market like Egypt, but Egypt has gone through its ups and downs. Of course, you know, the currency has been a relatively big issue because it's been so volatile. But there's a massive opportunity just because of the size of the country, size of the population, and what you can do from an infrastructure standpoint. I think where Morocco, you know, stands out is it's a very interesting market, and I think as of recent, the government is really trying to attract more of the people that are looking at Africa in general, and want to position Morocco more as a hub for the African market. And then I think also Jordan has a very interesting dynamic because there's a lot of technology talent in Jordan, and it's almost like an export product because you'll find a lot of Jordanian founders, you know, in Dubai, in Abu Dhabi, you know, in Saudi. You'll find them in the US, you find them in Europe. So they've really managed to educate, you know, strong technology entrepreneurs and then have them expand into other countries. So yeah, to your point, you know, each country has to be seen sort of very individually. And it's a very interesting way of looking at the region and understanding how you navigate going to all these different ecosystems.
You mentioned a few things at the beginning, but just to, we were talking about specific countries. Why did you pick Qatar? What attracted you? Let's say, what are the differentiators, of Qatar that made you set the fund there?
Yeah, so we've built a number of strong relationships from Qatar over the years. So that really kind of helped, make this decision. On the other hand, we've also learned that, working with the regulator here was very forward-looking. So it made it easier for us to set up, have a direct connection with the regulator, have a lot of conversations about the fund structure, the strategy, how we wanted to operate. I also think, to my earlier point, from an infrastructure standpoint, so living in Qatar and sort of being part of this ecosystem is very convenient. VCs travel all the time to meet amazing founders across the region. So traveling from Qatar is very efficient. It's very easy. It, of course, has a great airline. And I think more and more you're seeing large events coming to Qatar. The Web Summit is a good example. They had their first edition earlier this year. They've had a number of larger sports events, and it does help attract people to come to the city and really kind of explore and spend time here. I think in the other markets, for instance, Saudi and Abu Dhabi, although we'll definitely invest in those markets, they have progressed further along in terms of their venture ecosystem. So I think in Qatar, we can still make a fairly big difference as opposed to being in those other markets.
Is there some sort of startup law in the making in Qatar? Is that correct?
So during the Web Summit, they've launched a few initiatives. So one was to expedite setting up a startup company. So during the Web Summit, I think they subscribed almost over 1,000 companies in that same week. So that really sort of show that they can move forward with this process. There are indeed a number of sort of laws in the making. They're working on a digital assets framework together with QFC. There's been a few initiatives around a startup visa. So those are still all in the making. Again, if you look at the wider GCC, there's been a number of initiatives to really sort of attract startup founders to see the GCC as their home. And now Qatar wants to play a bigger role in that as well. That is correct.
Golden Gate Ventures has recently published a report called Qatar Rising, where ambition and capital converge. We have discussed some of the, let's say, of the possibilities and the upside that you see from Qatar, but is there, let's say, anything you can tell us about the report? Any, let's say, findings of the report that you found particularly interesting that you can share with the audience?
Yeah, one of the things that was important for us to highlight in the past 2 years, as we were speaking about setting up the fund here and navigating that landscape, a lot of people were asking us what does the Qatar ecosystem actually look like? Because people assume that there are hardly any VCs on the ground, or there are hardly any families investing in this asset class. With the report, we wanted to do two things. One is give a bit more of a high-level view of just what's happening in Qatar from an industry standpoint, from a regulatory standpoint, who are the big investors here. But we also wanted to highlight the venture ecosystem and mention a few companies in certain sectors that are fundraised, that are growing, that are expanding their business in the GCC. We wanted to highlight a number of initiatives, and not to give too many spoilers, but we talk about the venture landscape and what is happening. There are local players on the ground, Qatar Development Bank, Rasmal Ventures, Doha Tech Angels, QSTP. So there are a number of initiatives already on the ground that are actively investing in the startup ecosystem. So it was for us more a way to showcase and highlight, because I do think from a distance, it's hard for people to see what is happening actively on the ground. So we use this industry report to showcase what is happening in Qatar during the Qatar Economic Forum.
And just last question about Qatar, sorry, but it's, as you can see, it's a topic I like. I've been there a couple of times. I find that country fascinating. I'm also originally from Argentina, and Argentina won the World Cup there. So for me, that's a huge, it's a huge pull factor, let's say.
Absolutely. Yeah.
How do you see the future? Qatar is making, like many countries in the region, they are making huge efforts for diversification, for not depending so much of energy exports. If you, let's say, if you had to guesstimate a little bit, where do you see Qatar going? Do you see, some people told me, oh, Qatar is going to be the next Singapore. It's aiming in that direction. That's the model Qatar is going to be. What do you think?
I mean, it's hard for countries not to want to be Singapore, right? I think Singapore has really set the benchmark on the number of items, but especially if you look at our industry, the number of VCs. I think currently it is 325 VCs, active VCs, in different forms and shape in Singapore alone, in a small city state. From an infrastructure standpoint, it's an amazing country, and they've done so much. So it's hard not to want to be a Singapore in that sense. The comparison has been made quite often. I think because, in terms of size, if you look at the country itself, population, it feels very, very similar to Singapore. If you look at the number of expats that are here, I think, again, very similar to what sort of Singapore in terms of ratio is showing. I think a few of the ambitions when it comes to what Singapore has done for the venture capital industry, like a very, very supportive government, supportive regulation, in general, kind of supportive ecosystem, favoring founders. I think it's important for Qatar as well, and they're doing their best to kind of make those steps forward. And the reason I'm mentioning this is to your point, whether they can diversify away from just energy exports. I think clearly energy exports will remain, huge business for the country, and I don't see that changing anytime soon. But diversification is important for a few things. Just, if you look at the younger population that is really want to be active in the innovation side. But if you look at traditional industries, whether it's manufacturing, whether it is oil and gas, whether it is real estate, there is disruption happening within those spaces. And I think from a Qatar standpoint, you want to be at the forefront of innovation, and you want to ensure that you have a leading role, not just for your existing population, but you wanted to make that international as well. You want to be able to attract companies that the locals, but also expats can work for. You want to make sure that research and development, comes to the city and really expands here. So even if you look at oil and gas will remain, a very, very important and big industry for the country. It's an innovating and it's a very innovative sector as well. So you want to make sure that you're able to attract it. So I think if I look at, Qatar, let's say 10 years out, I think we'll definitely see, more firms like ourselves, placing their headquarters here. I think similar to what Abu Dhabi's been able to do in terms of attracting funds here. We'll see more diversification in terms of people from finance industry, people from the gaming industry. There's a lot happening on the gaming side as well, from the automotive industry in terms of developments on food supply chain and food security. I think all of these industries will grow over the next few years and will grow substantially.
I really like that in your description. I basically read what the description, your bio, very short bio from the Golden Gate Ventures website, that it says that you're a battle-scarred entrepreneur.
Yeah.
Luckily, not visibly scarred.
Exactly, yeah.
But given your experience and all the hard-fought battles that you have on your history, I'm sure. What are what advices would you give to young entrepreneurs, people who are starting with a company, with a startup in Qatar, in GCC, in the MENA region, and they are obviously trying to scale and to attract international capital? I know this is a very general and difficult question, but some tips will be welcome for sure.
Sure, absolutely. So I think that the first and foremost is if you are looking to expand to the region and build here, is find a very strong local partner to work with. And there's different shapes and forms of partnerships. It could be just a commercial relationship, it could be a joint venture, it could be an investment, but having a local partner in the GCC, I think, is imperative if you are looking to expand here. I say the second thing is just do your homework, and it sounds like an open door sort of easy advice, but I really want to encourage everyone to spend time here. As you said yourself, you've been here a few times. You've kind of seen the infrastructure and the ecosystem. Spending time here is really important. One is to understand the landscape, understand differences from your home market, get a good sense of who are strong partners to work with. Again, understanding regulation, understanding where to focus on, what are the leading and interesting industries. So spending the time here is very important. So research before doing that expansion. We spent about 18 months in and out of the country, just kind of doing our homework and our research. So that was very important as well. And then the third thing is just have an open mind. I think if you look at the GCC as a whole, people often think, oh, I'll come there to fundraise, and then I'll sort of kind of go back to my home country and work on my company. I think if you are fundraising here, it's the people want you to spend time here if you are raising money from the region. So kind of really understanding the difference. It is not as transactional as you might find in other markets. It's really around building trust, building relationships, and that costs time. You can't do this overnight. So I think those three things combined is really finding a strong partner on the ground, doing your homework and building trust. It's almost kind of intertwined, but I think it's very important advice that I luckily got fairly early on. But I do see people that try to be a bit too transactional, too fast, and that leads to a lot of closing doors.
Now let's switch a little bit to the state of venture in particular. The first thing I wanted to ask you is the following. There has been a change. I mean, this is not new. It happened a few years ago, that we were living basically for a long time in an almost, money for free monetary policy, zero interest rate. That has changed in the US and Europe. What changes, and this has been going on for a while, which in a way is going back to normal. I mean, the new, let's say the new normal of 0% interest, which lasted a long time, was not probably the most normal, and probably not also the most advisable policy, but that's for another discussion. But now that it's been a while that we have interest rates back into positive numbers, what changes are you detecting in your industry? How are you operating in this new scenario?
Yeah, I'd say the most important one is the discussion around pricing and the discussion about profitability and sustainability of the business. In the past few months, as we have been navigating deals, one of the biggest thing I've always been hearing is around investors asking for a larger discounts when it comes to pricing of older rounds that have been done either in 2021 or maybe even 2022. And this comes off of, to your point, where capital was free. You almost got money when you get money, that type of era. And that lasted for a very long time. So the pricing discipline, went out the window for a very long time as well, which meant that companies at a very early stage or with not a lot of traction would get a very high price in their valuation. As these companies were coming back to market, they found a different environment. The funny thing, and I always remind people this, is there is more liquidity in the market than there's ever been before. So it is not the issue that we don't have enough liquidity in the market, but it's just the risk appetite. If you sit on a lot of cash, and you don't understand the risk of investing in venture, people might say, I'll choose a different asset class that gives me a more sure return as opposed to venture, because I don't understand how you got this valuation 2 years ago, given where the company is. So we're noticing that discussion has definitely changed. So pricing has come down significantly across all the, I'd say across most of the rounds. I say seed has been fairly protected, but anything that is post-seed, has really kind of suffered from pricing. I think that is one. The second thing is just around how companies scale and how companies grow. Initially, you always would raise money to go into a new market and expand your business and hire a bigger team, launch new products. I think those discussions get more scrutinized. So as you are looking to, for instance, expand to a new country, people look at, okay, what does the competition in the country actually looks like? Are you burning money just to acquire more market share, or is there more of a sustainable growth as well? So looking at 100% growth month over month, I think that goes out the window really quick. And we talk about how can you grow your company sustainably so that you're not dependent on raising funding every 9 months, but let's see if you can extend your runway for 18 months and have those funding horizons change. I think the other thing is that the growth capital has changed as well. We had an era specifically in 2021, late 2020, 2021 as well, where you had large hedge funds coming down and investing in venture, like an entirely different asset class. And what happened was that everyone was, of course, happy with capital coming into these businesses, at a higher valuation. But then what happened is these companies get stuck with a massive amount of capital, and you have to account for the spending, like where I'm going to spend this on. But then the second thing is a lot of these investors didn't come back to the ecosystem. So they might have invested in a horizon of 12 months, and then they decided, oh, this is a very risky asset class. I'm not going to invest back in this asset class again. Or I am going to invest, but I'll pick 1 or 2 deals a year as opposed to 6 or 7 deals a year. That has a massive impact on what growth venture looks like for us as well. So that has definitely changed. So you're now finding other partners. CVCs are back in the market. Some family offices are looking at late stage round, but then at a heavy discount. So that landscape has changed as well for us.
Probably it's going to be the most imprecise question that I have asked you, but I really would like to know what you think about this. And please correct me, because even maybe the premise of the question is wrong. It seems from the outside, for people like me who are not experts in venture capital, that venture is, let's say, reserved for like very big players, like as you were saying, family offices, big investment funds and things like that. If that's the case, and I'm not incorrect, do you think we should try to think of tools or ways in which to bring the possibilities of venture for a more smaller investors, or probably that's not a good idea, because again, as being in venture is not easy, and the rates of success are definitely not assured. So how do you see this topic?
Yeah, it's a very good question, and there are initiatives globally to kind of bring venture to the retail market as well, and this allows for smaller investors to invest. That being said, there are a large number of angel investor syndicates that allow you to invest a smaller check, and you don't have to be part of a big family office or a big fund to invest in these companies. So you can start with as small as like $5,000 or $10,000 in terms of making those investments. Of course, for retail, it will be even smaller, and it would allow basically everyone to invest in this asset class. I think venture is unique in the sense that you invest in people because when a company just starts, the company changes over time. So the company that you invest in might look entirely different than the company that looks like 5 years later. I think for people to understand that, it takes a bit of education to feel comfortable around that type of risk. And as you mentioned, a lot of the companies that have been started will not make it to the end in terms of they won't raise the next round of funding, they won't get to a proper exit. And even generating exits or liquidity in venture is not easy, right? You have mergers and acquisitions, you have IPOs, you have trade sales, so you have secondaries. So there's different ways of generating those exits. That does take a bit of sophistication. And I think that's one of the reasons why venture has been really specific to a certain type of investor that understands this risk, that understands the innovation, that understands technology, and the role it plays, but again, most foremost, understands the risk that they're taking. And for someone that says, hey, my life saving is $80,000, I wouldn't spend $70,000 on investing in venture. It's just too risky. So what we're seeing in general is people have between 5 to 10% of their assets. They would put this into a more riskier class, which is going to be venture. And I think that's the reason why you're not seeing a lot of retail or smaller investors in our asset class.
Michael, when you invest, what are you, let's say, can you mention a few features that you are trying to look in your funder, let's say, because as you said, you invest in people in a way, of course, people with a good idea, hopefully. What are you looking in the person?
For us, it's really important that this person understands what it takes to execute a company. And what I mean by saying is as a founder, you get a lot of distractions all the time. You have to hire a new team, you got to speak at conferences, you have to raise capital, and so on. So there's so much on your plate as a founder, besides just running your business and scaling and growing the company, that we look at the ability for founders to execute, which means that hyper-focused people that are able to push change. Because whatever you do within your startup company, you're pushing for a change, and at least change in status quo. That means you have to be really focused on execution, on finances, on corporate structure, on building a team, on managing your product, speaking to your customers. So you have a lot you have to do on a daily basis. So I think that is one, the ability to execute. Of course, linked to that is just the tenacity of founders. So that's what we look at when we interview founders in, what have been their previous failures, how have they recovered from failures, what does a day typically looks like, how do they take care of their personal health? It's a very important part of it as well. So that's one of the two things we look at. Another thing is around just industry knowledge. Some founders really take on difficult businesses. Think of medtech, quantum computing, AI to an extent, deep tech, logistics and supply chain. Those are complex industries. For founders, it is imperative that you understand how these industries work, and how you play a role as a founder as well. So that's something we look for. Just what is that industry knowledge? And it doesn't mean that the founder has to be like the all-in-all expert within that industry, but he has to be, or she has to be able to surround themselves with the necessary expertise as they are building the company.
Michael, thank you very much for your time. I really appreciate this talk, and I hope we can talk soon, maybe on another big launch or something like that.
Appreciate it. Thank you so much. Thanks for having me.
Thank you very much again to everyone who listened. Don't forget to subscribe on any platforms you use to get your podcasts. And we'll meet again at the next episode of the We Are Innovation podcast.
Thanks for watching this episode of the We Are Innovation podcast. Don't forget to like and subscribe. To know more about We Are Innovation, visit weareinnovation.global.